The S&P has been climbing a perfect slope over the last year and a half, but the chart master warns perfection never lasts. Not even here with me. No. So where are we headed from here? Let's go to Carter Worth of Worth Charting. Carter.
Well, it's true, right? Perfection does exist. There are moments in time or moments that last, but it doesn't last forever, of course, and often not very long at all. The market has been perfect. Everybody knows this. Independent of the constituents, has been a perpetual motion machine. When one area falters, another area comes in and picks up the slack. But we are churning and stalling. Everyone knows the internals, the percentage of stocks that are down 20% or more in the Russell 3000s. Climbing every day. And now we're losing some of the big ones. And I think ultimately it ends up with more of a drawdown than we've seen. So let's look at three charts. They're all identical. They're all of the S&P. So there's your chart of the S&P 18 months. And it literally is a perfect north by northeast, higher and higher, steadily higher, never too hot, nice little dips and pullbacks. Now look at the channel, second chart. It's been in just a perfect channel. And the question is this going to persist? What's happening under the surface would suggest that the answer is no. Final chart is just leaving the bottom of the channel and an arrow. The arrow is a judgment, that's mine. And what we're seeing here is, again, big stocks like Microsoft, big stocks like Google, which will ultimately drive the performance of the market, starting to flag. And if there was enough in other areas to pick up the slack, that would be okay. But for every bank that's been good, there's a JP Morgan, there's a Jeffries, there are consumer names collapsing from Nike to Lulu. And so the churn is on. And the question is, do we just churn or do we churn and roll further? I think it's the latter. Yeah.
When you look as today at the S&P 500, it was basically flat. The Dow down a couple of hundred. NASDAQ basically, I guess, basically flat as well. But you look at the plus minus advances decliners. There were about 2,000 decliners and 1,300 advancers. That tells you, and as you said, the percentage of stocks in the S&P 500 that are more than 10% off their highs. These are the kinds of things, the internals, Pete Najarian, that we have to pay attention to when the market is churning, as Carter puts it.
Yeah. There's no doubt about it. I think we all have to pay attention to that. And I think specifically, so many are following the charts these days of people like Carter, and for the right reasons, because these charts have been very, very incredibly accurate. And so it's something I think we all have to be very aware of while we're trading. I think that being said, it all does depend, and one of the reasons that I loved this past year was we had this rotation throughout the year that I thought was very, very healthy. Yes, we had some falls to the downside, but I loved the rotation from one sector to another sector to another sector. There were some sectors that absolutely just screamed all year long, like energy and some of the others, but the reality is I think that there is something very healthy about looking to see underneath not only just what's up, what's down, but what are the sectors that are taking charge? And I think that's important as well.
Jeff, is there a trade here in the broad market in the S&P based on the charts that the chart master just showed us?
Well, I think there is, and I think the continued momentum is going to be in financials and energy, like we talked about. You know, longer term, maybe you have some questions there, but that's where the momentum is. But to your point, Tyler, about internals, our friend Chris Verone put out a note this morning entitled Risk from the Top. And I think that's exactly what we're talking about here. It's risk from these large market cap names that are rolling over. And sadly, I agree with Carter in that I think there could be more room to the downside. I think this is particularly interesting in terms of internals. So the percentage of NASDAQ 100 stocks above their 200-day moving average is only 55%. So in prior corrections in the NASDAQ over the past, say, 12 to 18 months, we've had the benefit of much stronger internals, many more stocks in an uptrend. That's not the case today, so there's less participation under the surface. That worries me that there's a little bit more room to go on the downside. I look at the way Microsoft is trading through the 50-day, through the 150-day. That makes me think there's some technical damage that needs a little bit more time to resolve itself. So for me, I worry about that weighing on the overall index.